Most beginner investors lose thousands of dollars, not because the market crashed, not because they picked the wrong stock, but because of one silent mistake almost nobody talks about. And the worst part? You might be making it right now without even knowing it. Welcome to Money Nest Lab. Let me tell you about a guy named Marcus, 26 years old, works a regular 9 to 5 in Dallas, Texas. Last year, Marcus finally decided to stop letting his money sit in a savings account, earning basically nothing. He opened a brokerage account, did some research, watched a few YouTube videos, and started investing. He felt confident. He felt ready. Within the first 3 months, he had put in around $4,000. But by month 6, something felt off. His portfolio wasn't growing the way he expected. In fact, he had quietly lost over $900, and he had no idea why. Here's the thing about Marcus. He wasn't reckless. He wasn't gambling on meme stocks or throwing money into crypto at midnight. He was doing what most beginners do. He was following the crowd, moving fast, and skipping one of the most important steps in investing. And that step, that one simple thing, is what's costing beginners thousands of dollars in 2026. So what is this mistake? It's called emotional timing. Or more specifically, buying high and selling low because of emotion. Now I know you've probably heard buy low, sell high 1,000 times, but hearing it and actually doing it are two completely different things. And the reason most beginners fail at this isn't stupidity, it's psychology. Our brains are literally wired to do the wrong thing when it comes to money and markets. Here's how it usually plays out. You hear about a stock or an ETF that's been going up for months. Everyone on social media is talking about it. Your coworker mentions it at lunch. You see headlines saying it could go even higher. So you buy in right at the peak of the excitement. Then the market dips like it always does at some point, and suddenly you're down 10 or 15%. Fear kicks in. Your stomach drops. You tell yourself you'll sell now and wait for it to recover before buying again. So you sell, and then, of course, the market bounces back, usually faster than you expected, and you missed the recovery entirely. You locked in a real loss and gained nothing but stress. That is the cycle. And it repeats over and over again for millions of beginners every single year. In fact, a study from a major financial research firm found that the average individual investor consistently earns far less than the market itself. Not because the market failed them, but because of the timing of their emotional decisions. The market might return 7 or 8% in a year, but the average investor, reacting emotionally, might only see 2 or 3%, or worse, a loss. Now let's go back to Marcus. When I walked him through exactly what had happened, his face changed. He realized that every single one of his bad moves came from emotion, not logic. He bought a popular tech ETF after seeing it spike. He sold a solid dividend stock because it dropped for 2 weeks and scared him. He even moved a chunk of his money into cash after a news headline about a recession, only to watch the market climb steadily for the next 60 days. Marcus wasn't making investing decisions. He was making fear decisions. And fear is one of the most expensive habits a beginner investor can have. So how do you fix this? How do you actually break out of this emotional cycle and start building real wealth? The first thing you need to do is build what I call an investment plan. Before you touch a single dollar, this means deciding in advance what you're buying, how much you're putting in, and how long you're keeping it. When you have a written plan, your brain has something to hold on to when emotions try to take over. Instead of reacting to the market, you follow the plan. The second thing is to stop checking your portfolio every day. I'm serious. Most beginners check their accounts constantly, and every little dip feels like a disaster. The market moves up and down daily. That's just how it works. If you're investing for 5, 10, or 20 years, a bad week in April means almost nothing. But if you're watching it every morning with your coffee, your brain starts treating short-term noise like a long-term emergency. Try checking your portfolio once a week, or even once a month. You'll be shocked how much calmer and clearer your thinking becomes. The third thing, and this is the one that genuinely changes the game, is something called dollar cost averaging. This is where instead of trying to pick the perfect moment to invest a large amount, you invest a fixed amount on a regular schedule. Maybe it's $200 every 2 weeks, no matter what the market is doing. When prices are high, you buy fewer shares. When prices are low, you automatically buy more. Over time, this smooths out your average cost and takes emotion almost completely out of the equation. It's simple, it's boring, and it works. Marcus started using dollar cost averaging in January of this year. He set up automatic investments into a broad index fund. Same amount every 2 weeks, without thinking about it. In just a few months, he stopped obsessing over market news. He stopped panic selling. And for the first time, he actually felt like an investor instead of someone just guessing. If you're enjoying this kind of content, go ahead and like this video. It genuinely helps more people find it. Subscribe to Money Nest Lab if you want to keep building your financial knowledge in a way that actually makes sense. And comment below. Tell me what investing topic you want me to break down next. I read every comment. Here's what I want to leave you with. The market is not your enemy, Time is not your enemy. Your emotions, unchecked and unplanned, are your enemy. The investors who build real wealth aren't the ones who predicted every market move. They're the ones who made a plan, stayed calm when it got uncomfortable, and kept going when everyone else was running. Marcus isn't a financial genius. He's just a regular guy who finally stopped letting fear make his decisions. And you can do the exact same thing, starting today.